Hello, and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Pool community. My name is Wack. Today is December 9th. I'm sorry there has not been an episode for the last few days, so I'm going to cover a whole bunch of things that I missed. The biggest of those are ETH and BTC hitting huge price milestones. After that, we've got Rocket Pool's RPL doing well. We've got some new IMC ideas about RPL liquidity. We've got prizes for the incubators, our ETH discount, and a whole lot more. So let's get started.
10, 9, ignition sequence start, 6.
Okay, so what place can we start other than Bitcoin hitting $100,000? So this actually happened on Wednesday night, US time. So that just shows how long it's been since I made an episode. I'm really sorry about that. I just was way too excited about the price action on Wednesday night and then on Thursday. And because of that, I just didn't have enough time to get a recording done. And then when it came to Friday, there was too much to catch up on. And then I thought I'd record an episode on Saturday, but then I was traveling on Saturday. So sorry about that. But anyway, $100,000 Bitcoin. The idea about it kind of started earlier on in the day, like in the late afternoon. And what we saw then was that, people were kind of getting excited about it, thinking it was possible. Price was hitting like 99,000 plus, it hit those higher numbers, then it kind of retraced a little bit, and then it was going up again. So everyone's kind of getting ready for it. And then later on Wednesday evening, the price hit. So here people were just like, it's going to hit 99,700. And then there were screenshots like over 99,000, 99,999. And then it did it. And then it did it. That's 100,000 screenshots here. And people here for the 100,000. They got the screenshot exactly. Bossy got on $99,999.99. And then people saw it hit on Coinbase. All the different platforms started hitting it. So Bitcoin hit this truly phenomenal milestone. That, in all honesty, if you had told people 12, 14 years ago that this is one BTC would be worth $100,000, they would have called you absolutely crazy. Of course, there were some people who had already done the Kool-Aid back then, but yeah, this was a monumental, absolutely monumental moment in crypto history. Brian Armstrong was very quick to tweet out about it, saying things like, if you had bought $100 of Bitcoin when Coinbase founded in June 2012, it would now be worth $1.5 million. So I think he probably bought a few $1,000s worth of Bitcoin back then. So I think Brian's probably doing all right with his Bitcoin purchases. But yeah, then they were just saying how it went over $100,000. It was a nice little celebration for them. Bitcoin Superfizz put out a POAP for $100,000 Bitcoin. He says Bitcoin crossed $100,000. He developed a POAP to celebrate this weeks ago, but of course they didn't hit and they retraced a little bit. So he says you can send 0.0021 Ether to Brink Bitcoin Development, and then there's an address for an Ethereum address, and then you'll get the POAP without having to connect your wallet to any site because it's Airship. You just send the transaction, it gets logged automatically, and you get a POAP delivered to your address, which is actually really nice. And then here was the POAP for Bitcoin for 100,000. And that's not where the party stopped, of course. Earlier on in the day, there was a talk of Jerome Powell, who's the head of the Federal Reserve in the US, talking about how Bitcoin is a competitor to gold and not necessarily the US dollar. He was kind of talking about it from a speculative asset perspective, and how gold, Bitcoin is not a threat to the dollar, but it's a threat to gold potentially. So that had some Bitcoiners really excited as well, because they've obviously called Bitcoin digital gold for as long as for a long time now. So yeah, that's what they were talking about. So there was a lot for them to be excited and happy about, but not to be outdone, the Ethereum gang the next day were at it, and here it was talk of ETH, and just some mere hours later, making moves towards the $4,000 mark. And Bossy again was around with others in trading at the time, kind of getting ready for the numbers to hit 3,990. The prices were doing really well, they were going, and then I said ETH 3,990, 4,000 incoming, and then others were kind of getting their screenshots in, showing the price, and then then the price hit, and of course, that was $4,000, and very quickly actually raced up to just less than $4,100. But that was actually really nice that ETH was catching a move. and it was performing quite well at that moment, so people were quite happy, and that was actually a really nice moment as well. And then, as it always happens when ETH and RPL start moving, then they people in trading start talking about islands. So there was a little bit of talk about islands a few times, and yeah, Meek here said irrational exuberance is people celebrating an extremely latent, modest pump, and we're not even at previous all-time highs. And they're just saying like we're just letting you know that it hit 4,000, and then Marceau popped in. Of course, whenever there's island talk, there's Marceau not far behind, and he says this chat looks interesting again. So people were then showing pictures of islands like and how much they cost. Like you can buy islands for $1 million, then like $1.5 million, $700,000, and over $1 million. But this one on the bottom right is actually quite beautiful in Brazil. Your private island actually has a private pool on the private island, and that looks pretty nice. It's just $1.4 million, like that's not much at all. So yeah, but then I'm just kidding. Like people were then actually quite just quite happy, like it was a really positive mood in the community, and it was just really nice to share that with people and kind of just be happy and fun. So that was really, really great, of course. And then as always, like there was some really interesting tidbits that came up. So with that price move here, Mick shared information saying that ETH just flipped MasterCard at a $485 billion market cap versus a $484 billion market cap. So it's cryptos and beast mode. Sorry lads, we take out JP Morgan at $692 billion next. ETH is on this revenge arc slowly but steadily, one by one. So of course, we'll need another significant pump, probably up to around 5,500, I think, or somewhere between 5,500 and 6,000 to overtake JP Morgan. But that would actually be really, really great. I think JP Morgan is one of the biggest banks in the world, or if not the biggest bank in the world. So that would be really amazing for ETH to take over the biggest banks in the world. And a lot of this movement was happening on the back of ETH ETF flows and BTC ETF flows. So here you can see that like for the last over 2 weeks, we had every day was positive inflows with Thursday and Friday, Thursday especially being the record inflow day for ETH at $428 million. And the inflows for just BlackRock's Ether were nearly $300 million, which I think would have put it as the second biggest day in ETH ETF history, just on the back of that alone. The ETH ETFs, of course, were also going gangbusters. Like they were having, a $676 million day, 556 million, 766 million. Just the numbers were like absolutely astonishing. Like there was just so many inflows going on. So that was just nonstop. And of course, if you wanted, you could also get this Ether at $4,000 again. Finally, woohoo, POAP. And this was, of course, put together by Schifrin, and the art was put together by Schifrin, and it was developed and distributed by Superfizz. So the money from this went to the Protocol Guild. I think it was 0.001 ETH, which is about $4. So that was actually really nice that Fizz kind of organized that as well. So there were some really nice POAPs that you could collect for that. And that was all fun and games. Okay, let's talk about RPL. So RPL, not to get left behind, was also making really nice moves, and it was catching a lot of attention. So this is its move up to $19.90. It had done that, and then it was just kind of hanging out at the $18 range for a few days there. So people on Reddit started talking about it here. People saying RPL's up over 20% in $24. Is this temporary, or is this starting an ascent? And it says if the recent rise a flare up that will dip, or is it ascending in response to the impending cycle? Not sure whether to wait for a dip to increase my holding now or jump in on the rocket before it takes off. Sorry for the pun, couldn't resist. So then people on Reddit were kind of giving their feedbacks. Some were saying, yes, you should buy this. A couple of trolls were even saying, don't touch this, like, etc. But then on Twitter as well, the TA experts were all coming out, and this was really funny to see. Like here, there were people like going back all the way to 2019 for the token, and these guys were counting like Elliott waves. So they're counting like one wave up, down, up again, down, and then up, and then like a sideways movement, and then showing that basically that by the end of 2026, RPL will be worth between basically $150 per token. So I was like, I'll take that. And then there was more analysis here as well. So here people saying, RPL looking like this wave 3 is complete, looking for a wave 4 entry to 1483 for a wave up run in this short term to $41.20. Kind of got lines drawn on the chart. Being bullish on RPL, or just crypto in general, I think, using TA as the prices are going up is of course really easy, but crypto never makes things easy. So in the last, in the last hour, crypto really took a hit down, and RPL of course was one of those tokens. So its recent high was $19.90, and since then it got smacked down to $12.03, which is quite a big hit down. But of course, right now the charts are showing that RPL is down 18% on the day. 19% on the day. And then other crypto like ZK Sync, for example, here is down to 20 cents, which is also like 19% down on the day. And others got big hits as well. Like the alt market got hit quite hard, and I think this was just a shakeout of leverage, basically. Like ETH wicked down to 3,500, which is quite a low amount as well, considering it was above 4,000 overnight. So the crypto prices took a big hit, but it looks like they're all rebounding quite quickly. I think they'll kind of take turns to rebound in the next few days, but it looks like they bounced up and now they're slowly trending upwards again. So I'm just covering this because the TA bros will say things that they think their audience would like, or kind of goes in line with what the market's kind of doing, but they're just guessing, like, as much as it's nice to kind of joke around about the TA showing big prices and kind of like starting to imagine that, the reality is that crypto can really smack you down and do what you're not expecting at that time. So definitely be careful, because there are people who have taken leverage long positions, and if you were in like a 20 to a 5x leverage long position, I think you would have been wiped out on this move, depending on when you opened it. So that just tells you how brutal crypto can be. Please don't lose your crypto. Okay, let's talk about the IMC now for a second. So the IMC has a new strategy, and this was born out of the balancer pool that was the RETH RPL pool. And it looks like there were a couple of people who had been providing large amounts of liquidity kind of pulled out of that pool. So the yield went up quite a lot, but there wasn't that much TVL left in there. So there was a lot of caution that people were asked to kind of keep in mind. So Val here wrote kind of to the wider community from the IMC's perspective, saying, you may have seen the balancer pool spiked super strongly. This is because a large liquidity provider moved out. This spurred us to do some calculations of the strategy in general. And it says, we concluded that using a full range of liquidity is being extremely costly versus concentrated position, to the point that it would be better off, even short term, with concentrated proof of liquidity. Long term proof of liquidity is pure win, as you keep some assets in all cases, versus renting liquidity where you spend it all. So Val goes on to say, it also means that if the price is even slightly stable, we'll get to see accumulating liquidity rather than just the amount we rent for the fortnight. So here Val says, the initial plan is to make a Uniswap version 3 RETH RPL position that is 1/5 of the current price, all the way up to 5x the current price. So every fortnight this would be updated, saying if further than 2x from the center price of an existing position, we start a new position around the current price, again 1/5 of the price to 5 times the price. And it says you feed the position centered closest to the current price. And it says to make execution less painful, we've made an execution safe. This is currently a 1 of 3 safe with Waldorf, Samus, and non-fungible Yokum as signers. The plan is that the safe work with small amounts of funds, up to $5,000, that are only there temporarily. Essentially, we'll transfer a bit to the execution safe, and we'll do the necessary token swap and either mint a new position or create increase in the existing position. Is that we'll keep an eye on it, but we think this should be a win both long and short term. So we haven't had too much feedback about it, but the safe was created, and Pectra then said that here is the safe. Can you please add it to monitoring for the IMC execution things? So that's looking like the new direction the IMC is going in for the RPL RETH pair. A whole lot of people were asking for liquidity here, and sadly we're going to start off small because we don't have that much money. But as time goes by, we'll be adding to that position. And like Val says, the good thing about protocol alone liquidity is that even though it's slightly less efficient in the short term, like in the long term, you don't lose all your crypto, so you add more and more to it, and because of that, the position can get better over time. So that's actually really cool to see. Okay, let's talk next about the RETH Incubator, and here there was an update from the GMC about the rewards process. So Schifrin said that there was a bit of problem, basically, let's just say, with the rewards, because normally what would happen is if you were a submitter, then you would get rewards as a submitter, but if you were a judge, then you would get paid as a judge, but not as a submitter. So you could basically be eligible for one of the two payments. Either you'd get money as a reward or you'd get money as a judge. Now, what happened here is that Schifrin and the GMC kind of decided that we were giving Nashua a bad state. So we kind of like voted on it internally to change things. So this was the result of the vote. So Schifrin said eligibility. The GMC reviewed Nashua's eligibility in light of the original terms, which stated that reviews would not qualify for submission rewards. So despite Nashua's own scores being excluded from the calculations, their submission secured second place by a significant margin. Nashua had been asked to step in to the reviewer's role after an extended period in which no one else volunteered to act as the final reviewer. Considering these circumstances, the GMC determined that Nashua should be eligible for the full $2,000 reward. So the compensation, the original awarded amount is the first tier. So the first and second prize got $2,000 each. The second tier, third and fourth, third to fifth places got $1,000 each. And then the tier 3 is 6th place to 20th place got $2,500 each. And it says the people who were ineligible, they lacked clarity or detail. It's just in the event of a type, blah, blah, blah. So then it says the GMC identified an error in this language as awarding 20 submitters would surpass the $10,000 maximum payout. It says to address this, the GMC opted for a more inclusive approach by honouring 20 submissions rather than capping the total compensation amount. So the award is as follows, and he can see that Nashua got $2,000. So that was really, really great to see. I think the GMC here made a good decision in giving Nashua that money. Okay, let's talk about the RETH discount on the peg on the secondary market for the price compared to the protocol price. What you see is that people have been selling RETH on the secondary market because the deposit pool is empty, and because of that, it's a sell pressure on the price, which means that the price went off peg, which is where it's supposed to be, and then had a small discount. And that discount actually has been fluctuating between being quite large. A few weeks ago it was 0.8% discount, I think, to being quite small, where it went to positive, but then last week it went down to quite negative again. However, now it's getting closer to peg, and this is the screenshot from a couple of days ago when it was actually closest to its peg. Now you might be wondering, why is this happening? Well, there's two possible reasons why this is happening. One is that people are buying RETH on the secondary market, which brings demand back for RETH, which means it moves closer back to its peg. And the second thing, sadly, is what looking is more likely here. So Joachim had this script that he ran to show you what the status of validators in the rocket pool was, and he saw that there were a whole bunch of validators that were exiting, and as those validators exit, then that ETH goes back to the protocol, which then gets arbed away into the secondary market, bringing our ETH back to peg. So non-fungible Joachim says this morning's edition, pending beacon chain full withdrawals 216, and pending mini pool full distribution 91 mini pools. So that's a total pending exits of 307. 53 of those are 16 ETH validators, and 254 are LEB8s, and the total amount of ETH that will go into the deposit pool is 6,944. And of course, with that ETH that's coming back to the deposit pool, then that would get burned on the secondary market, and of course that would bring our ETH back to peg. Now that's kind of what's happening here, sadly. And if we actually have a look, we see that we still have 365 mini pools that are now waiting, and we have space in the deposit pool for over 11,000 RETH just to clear the queue, and 18,000 RETH on top of that. So we have total space for 29,200 ETH to mint RETH. So if you know any of your whale friends who are interested in buying 30,000 ETH of RETH, they are welcome to pop into the Rocket Pool community and put that into the deposit pool. We'd be really grateful if they did. Okay, moving on to some staking news now, and we're going to start here with news from Constellation and from NodeSet. So NodeSet, of course, are the people who designed the Constellation software, and that was being managed by the Gravitar team. Now here Wanda has an update saying, hello everyone, after successful testing on the Haleshki testnet for the past few weeks, Gravitar's mainnet Constellation deployment has been upgraded to version 1.0.1. It says see above for the change notes associated with this version. So it says soon we'll be releasing 1 node operator reward information and 2 write-up summary to summarize Constellation's first 2 months of operation on mainnet. Stay tuned. So I covered this post on Rocket Fuel just over 2 weeks ago, talking about their contract changes and what's kind of going in there with like oracles and parameter changes and things about liquidity, prioritization, and time lock and all that kind of stuff. So if you're interested in that, go and read those couple of posts, or you're welcome to ask questions in the NodeSet Discord. Okay, in other staking news, we have an update from Christine Kim, who is talking about the Pectra upgrade for Ethereum. So here she said that there's been a bunch that's happened over the last 2 weeks, and here's the latest on ETH's next upgrade. So there's certain things that are official and that are happening. So the blob capacity will double from a base of 3 blobs to 6 blobs. However, the target the max is not changing. So the max, it is changing but not doubling. So it's going from 6 to 9 instead of from 6 to 12. Here it says EIP 7623. The increased call data cost is also in. So this means that call data for L2s just won't be as profitable, because you've seen recently some L2s are using call data instead of using blob data, which is what they're supposed to be doing. And then EIP 7762, which is about the minimum blob base fee, that's not included so far. However, there's going to be more discussion about this coming up. EIP 7639, so this is serving pre-merge history, and EIP 4803, so that's transaction gas, may be tied to Pectra pending more discussion. The former is purely networking change, the latter is retroactive EIP that wouldn't change existing client behavior. And then there was discussion about the Mekong testnet, and there was some major issues causing all client teams to issue fix, and it's stable now. And then we need DevNet 5, and then you can get a full write-up of the calls and get that information there. Okay, next we've got some interesting news that's coming out of Anchorage Digital, and they're saying that they've launched support for Liquid Collective's LSETH. That's making it the first OCC chartered US regulated bank to support participation in liquid staking. And then there's information. So that's actually going to have a look at what the information is. So here Mario has an update on this, saying that the first US bank goes full liquid ETH staking. Anchorage Digital just becomes the first US bank to back liquid ETH staking. They're rolling out Liquid Collective's LSETH, so a token for ETH staked on the Ethereum chain. This is a power move by big institutions like VC firms, wealth managers, and blockchain protocols. They'll be able to stake directly through Anchorage, with more than $430 million locked in Liquid Collective's LSTs. This is just the start. Then that's information from Cointelegraph. And then the question is, of course, who's running these validators? But we don't know. Yeah, I guess Anchorage Digital will be running them themselves. Now, what's really interesting here is that this is, people just buying an LST basically, and they're using that to stake. And I think this kind of plays into this idea of there potentially being a future where there'll be some ETH staking ETF that comes out, and on the back end of that, it will just be the ETF issuer, holding a basket potentially of LSTs. Of course, we wish that one of those would be our ETH. Now, if you look at the basket LST tokens on Ethereum, our ETH is actually overweight in most of those, and that's for that decentralization premium that it kind of commands. But this is actually really, really interesting in that this is a product now that's being open to the banks. Now, there's some questions about how that ETH is going to be managed, whether it will be mixed with ETH from the general public and all that kind of stuff. And we just don't know what the specifics of that are, but hopefully we could potentially go forward in a world where something like our ETH could end up in baskets of ETH staking ETFs. That would be absolutely amazing. Okay, talking about staking, it looks like there's a new LST coming up on the block, and this is Solo. So it's a project protocol that lets anyone run Ethereum Validator with just 1.25 ETH instead of 32 ETH. So, the node operator bond is a lot smaller than what Rocket Pool offers at 8 ETH, and it's kind of going in line with like Lido and others with those very small bonds. So it says it enables an LST backed by the portion of validator stake, unlikely to be lost without relying on governance or trusted hardware. So they've got some information here, but what's really interesting is the unlikely to be lost part and how it works. So it says the key insight is even if the validator misbehaves, it can only lose 3.25% of their stake, around 1.04 ETH under normal conditions. This creates an opportunity. We can make the remaining 96% of their stake liquid. So that's kind of where they're getting the numbers from. So they're looking at the slashing penalties and seeing that that's basically all you need to cover. However, what they're not covering is MEV theft and how that's going to look. So I think there's some like question marks and holes here in the research from the way they're presenting themselves, from what I can tell. However, there's definitely some question marks. And then there's talk here about the 51% attack. It says this is where the economic design gets interesting. Solo implements an novel anti-concentration mechanisms. As more ETH flows into the protocol, the amount of Solo minted per ETH decreases. So the larger your stake, the greater this effect becomes. Small validators always get better terms. So this again here I think is pretty a naive assumption because it's trivially easy for large node operators to make it look like they are small node operators, and it's, from what I understand, quite trivial to make that happen. Yeah, I don't know exactly what full mechanisms they're going to be. Jasper here has a question, like I said, like what are you going to do about MEV theft? Seems like a reasonable attack vector, and it could keep the LST under earning. So if you have enough of your node operators who are stealing MEV, then the overall APR is going to those people stealing instead of the token holders. And Jasper then also asked the other question. He says, I don't understand why large node operators can't just spin up new nodes from fresh wallets to get LTV max every time. Can you help me understand? And of course, Jasper's asking the tough questions and there's no reply. Now, I don't know if anyone has replied to Jasper separately or not, so I can't talk about that. But I think those are two big gaping holes. So if you are interested in getting involved in purchasing Solo's LST, then definitely keep those issues in mind, because that's the real concerns that you should have. And here there's an ETH researcher post as well. If you want to have a look at it, you can check it out. And they're kind of going into a lot more detail of their process, and you can read it. Maybe the questions that Jasper and I have been answered here, but I don't know if they have or not. So yeah, you can go and check that out. Okay, talking about staking still, we got news from ETHstaker and then from Nixo about a slashing event that was going on. So here, this is ongoing slashing event is happening with some newly deposited validators. Looks like someone got fancy with a fallback, and both setups are trying to attest. Their validators are getting slashed over time. Lots more to go if they don't shut down their setup soon. And make sure that you're monitoring your nodes on Beacon Chain. Then Nixo had a couple of updates. With the first one, she said there were 13 slashings and counting. Make it stop. The person was running 1,269 validators. So it says only the new ones are getting slashed though. They deposited 157 new validators yesterday. And then there was another update saying it still hasn't stopped. They're up to 21 slashings now. All this operator needs to do at this point is unplug the affected node. They'll lose a lot less ETH with attestations being missed than they are getting with slashing. And this is and Nixo said this is presumably a professional operator with no monitoring setup. So those are some like egregious issues. For like a person of that size, it's more likely that they are some kind of professional entity instead of like a hobbyist, I guess. But to set up your validators without having any kind of monitoring or alert system in the case of slashing is egregious, especially now with their tools that will like shut down your whole node if there's a slashing on your node, just to prevent more slashings from happening. And then as we got details, it looks like what happened is the first set of slashings happened and then it stopped, and 7 hours later more slashings happened. So here you can see like from 4 days ago, the timing was such that like 4 days and 20 hours ago, and then 4 days and 12 hours ago. So there was a series of slashings. I think so they got some slashings, they shut things down, tried to figure out what was going wrong. They thought they'd fixed it. Then they started their validator up again, but they hadn't fixed it. So they accrued some more slashings. And each one of these slashings, of course, is a 1 ETH penalty. So yeah, that's really bad. Yeah, that's Nixo's updates. So next, what we have here is the here Madman was saying about the 7 hour pause in between, but that I think is explained by them trying to fix it and then not being able to fix it when they thought it had been fixed. Okay, we've got a tweet thread from Token Motion here, and this is Token Motion talking about Ethereum and what ERC20 tokens are. So, but this is by Sleety saying an ERC20 token is a type of cryptocurrency built on the Ethereum blockchain. Let's break down what they are and why they matter. So here you get tokens. So it says this is Ethereum request for comments 20 proposed by Vitalik and Fabian in 2015, a standard which outlines sets of rules and guidelines for creating tokens on the Ethereum network. And it says, Vitalik says we need to standardize, and Fabian saying here's ERC20, and then there's information about how it works, and all kind of comes together. So you can read through this thread if you want to become an expert on how ERC20 tokens work. And of course, RPL is an ERC20 token built on top of Ethereum with a whole lot of other tokens that we all love, such as the ZK token, Eigen token. Those are tokens I hold, but also things like Uniswap, Uni, Aave, and a lot of other big DeFi protocol tokens are ERC20 tokens on Ethereum. Okay, let's go back to the Discord here, and we have an interesting post from Dankrad, which is kind of a discussion here that's taken place with Gabriel, and this is kind of going back and forth, like with this idea of prominent Ethereum community members and foundation leadership talking about the L1 as an execution layer and how versus settlement layer. And then there was kind of a discussion going back and forth where MT was saying, clarifying my points, and Justin's, I believe we should keep DeFi and L1 and scale L1 until L2s are ready, wanting to scale L1 and wanting all activity to leave L1 are both things that I want, just on different time frames. Gabriel says this makes total sense depending on what scale L1 in the meantime means. I don't think it could mean anything nearly as fast or cheap as Solana or an L2 unless there is a strategic pivot and sacrifice home staking, but I could be missing any number of possibilities. And then Dankrad replies saying L1 does not need to be as fast as Solana to be competitive. It just shouldn't be so slow to push users away. TPS is not the main metric on which chains compete. To me, it looks like 10 times throughput is achievable without sacrificing home staking. We just have to quantify what the minimum node requirements are and what it's built for. And then Dankrad says the most important requirement is that we would never drop is actually the home staking and verifiability of the chain, what doesn't need to be able to run on a node from home. So then that discussion kind of went back and forth, but people in the Rocket Pool community kind of were talking about this, and there were some really interesting points that were brought up. So Jasper was the one that was shared in the tweet, and then I think it was Invis here kind of replied by saying, for context, Base is doing less than 10 times of mainnet right now, and not because they don't have enough blob space. So the idea is that, their mega gas isn't scaling fast enough, and they've got state blow issues and all that kind of stuff like that. And then Invis says, how about we implement things like ePBS first for a change? And he says, by going by logic of we can increase now because it gets fixed in the future hard fork. He says we can increase the gas limit up to 100 times because in the future everything will be ZK, right? He says again and again, dropping block history after threshold does not solve state growth. There is currently no solution for state growth. The more gas you allow, the faster it grows. Instead, use blobs, which do not have any permanent overhead. The whole idea behind blobs, And he says, but sure, since raising the gas is currently in, let's just do that instead of all the solutions we came up over the past few years. So yeah, Invis was actually quite strongly counteracting that. And this point of state growth, I think not enough people are mentioning it. State growth basically means that you need one file with the whole of the state of Ethereum in that file, and that needs to be accessible. And as you make the gas more, then the size of that file gets bigger and bigger, which means it's harder and harder for node operators to use that file and to manage their stake. And that's as far as I understand it from other people who are way smarter than me explaining it. And of course, any issues with my explanation is my lack of understanding rather than their problems with explaining it. But this is a serious issue. I know that the Binance Smart Chain has kind of collapsed under the weight of its state a bunch of times, where they've had a lot of issues with finality and getting the block builders to be building from the right height and all that kind of stuff. It's just really difficult to keep up on top of the chain. And other chains, of course, have had issues with going down and finality as well, like Solana, Sui, and all of these other places. So this is to say that Ethereum, like Invis says, he says we have idea for the blobs. We're using blobs. Now it's a matter of getting those better and getting the L2s better. And that's the roadmap that Ethereum has been on for a number of years. So he's saying, like, why not give that a shot? I think there is a tiny bit of a middle ground to be had here, in that you can scale the L1 a little bit and still keep things mostly okay for home stakers, and that is until May, when we will have the state history not need to be included from May 1st before the merge. So that's going to reduce the load on a lot of node operators, and hopefully that'll get us through another couple of years basically on current hardware. But that's definitely a discussion that's ongoing in the wider Ethereum community. Okay, moving on to some other news now. And here, the big news of the last few days was the Trump administration has pointed towards David Sachs as the AI and crypto czar. Now, this actually was a person who used to work for Coinbase back in the day. So there's a whole bunch of Coinbase connections in this new administration, such as Elon Musk, such as Peter Thiel being a big funder, and now David Sachs as well as the crypto and AI czar. Now, David, you might remember as being one of the co-hosts of the All In podcast. And what's funny is actually Donald Trump appeared on this podcast, I think. If I'm correct, I think he did. Or a couple of people like Vivek Ramaswamy did, definitely. I think Donald Trump did as well, but I'm not 100% certain. But yeah, I think David Sachs was involved in a big fundraiser for Donald Trump in California. And of course that, ingratiated him there. But David Sachs is interesting because he has been in crypto for a while, but I think these last few years he's been a bit of a sol maxi. So it's going to be really interesting to see how that plays out and what powers the crypto czar will actually have, whether it'll be anything more than coordination, or, whether he's going to actually be able to steer policy or not. That's going to be interesting to see. Okay, talking about Solana just there for a second. Solana actually had a bit of a pullback these last few days because it got a lot of negative press about pump.fun. And pump.fun, of course, is one of the biggest applications on Solana, which accounts for most of its throughput, most of its MEV and all that kind of stuff. And the issue that it had was, it turned off its live streams because some of the abhorrent content that was on there. But the UK actually restricts access to pump.fun. And this is on the front end of pump.fun. So there were ways in which you could still interact with the contracts, but it just makes it that much more difficult for normies to use unless you get like an alternative front end. Maybe that could come up eventually. But yeah, pump.fun's front end got restricted in the UK. So these kind of things, I think, really impacting Solana there a little bit. Okay, and finally, we're going to end with some news from the Rocket Pool community. And the first piece is that we had Patches saying, I got a new job, and it says Lido. And this is a restaurant that Patches visited with Nixo. So Nixo also was holding a Lido bag. So that was quite funny that they met up and they went for dinner with the Lido thing there. But Patches was actually a busy guy, and he actually flew to Chicago for our annual meetup that we have. It was a little bit quieter this year, but we had Marceau, Patches, myself, Thomas, and Superfizz turning up, which was a really nice meeting. Like, we actually hung out for a bunch of hours. Patches and I spent some time together on Saturday as well, before Sunday, and it was just really nice to catch up with these guys. Like I said, it was a little bit of a smaller turnout compared to last year because some of the people who wanted to come couldn't come in the end, but hopefully next year's will be all guns blazing and it'll be a really good one. But yeah, it was absolutely wonderful. It was a really, really nice group, and it was great to catch up with these friends who I haven't seen in a while. Some of them it's been a year. And finally, Invis got banned from the Discord. So this was because he said, yeah, coin, and something in that triggered the ban, and he got banned. And then it was also discussed who got banned as well. So then Hululo had to tag Kron and say, Kron, can you please unban these people? And Kron unbanned them. So yeah, there's a few keywords that will get you banned, such as web.app, and I think coin, and then also SGD will get you banned as well. So please don't say any of those words. But on that note, hopefully I'll be back on top of everything for tomorrow's episode. So we'll go back to the 5 episodes a week cadence. But hopefully we'll be back on top of everything. Anyway, thank you all for watching, listening, and being part of the Rocket Fuel community. I hope you enjoyed those few days there of the bull market. but now the bull market's over. So I hope you all took some gains off the table, but maybe there were too many people taking the gains off the table, which is why the price has gone down today. But anyway, I'll be back tomorrow and hopefully we'll have some more positive news to share with you all. Bye.